Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Wednesday, April 22nd, 2020, and this is the Daily Report for Gold and Silver. After passing a resolution to fund the payroll protection plan by another $500 billion, we saw gold shoot up strongly along with U.S. equities because that requires more spending, a deeper deficit, and central bank intervention. Gold is currently trading at around 1736.60. It is in the afternoon session in Australia, and it's down $1.70 from the closing price of New York. Speaking about prices, let's take a look at the price board and then our technical studies, in which I will detail what our current strategy is. The New York markets have just closed, and Australia will open up in approximately 1 hour. But today's net gain was substantial. We saw gold rise almost $50, currently up $49.70 at $1737.40. It's a net change of almost 3%. When we look at spot gold, it is above $1713.68, up almost $30 on the day. Platinum gained almost $15 at $773, and palladium was the only precious metal to sell off, $18.80, down $27.50, and silver kept up with gold today, gaining 43 cents, $15.31.5, and that is all within mild headwinds from a slightly higher U.S. dollar at 100.49. Let's take a look at our technical studies. Today's move was absolutely significant in that gold recovered so quickly and moved up so much in a single day after a pretty strong down day occurred yesterday. Of course, as this market came down, it came down from the yearly high at 1788 and then hit these lows right in here at approximately 1665. That occurred yesterday. Now, the market closed well under 1700, but that all changed today. You can see this blue line here represents 1700, and today's opening price was clearly above that price point. You can see that as the bottom of this green rectangle. While the market did dip below 1700 for a brief instance, it closed substantially higher at 1737, currently at 1736.40. Now, we had another interesting pattern that occurred that's a fairly uncommon pattern, and that is after a defined downtrend, if you get a smaller green candle that is engulfed by a larger red candle, which is an engulfing bearish, it is simply titled a last engulfing bearish. And then we had this tremendous move today to higher ground. So what is our best move from here? We did get stopped out yesterday, so we were correct, but we were a day early in entering the trade. My sense is that we will probably see this market move straight up to at least challenge the former top of 1788, and I believe that throughout the next couple of months, it will definitely look to challenge 1800, but that remains the brass ring. And I am also under the assumption that yesterday's low at 1665 completed the correction. When we take a look at the beginning of this last leg of the rally, which began on April 1st, markets trading at 1575, and it runs up to 1788. Then this recent decline took it past the 50% retracement, that's 1681, and came as close as just above the 61.8% retracement at 1656. The last chart that I do want to look at on today's show is a gold chart. Each candle represents 3 days. It does have an Elliott wave count as well as our current Fibonacci extension. When we do that, we're plotting our third wave starting at 1265, going up to approximately 1700. And from there, retracing, the actual retracement amount was well over 50% and just shy of a 61.8% retracement. That comes in at 1429. And of course, as I said, that's based on this rally here. When we do that, and then we plot a Fibonacci extension from this leg of the rally and begin it at the conclusion of our fourth wave correction, it is actually predicting that we could see this market move as high as about 1800 to 1880 during this last and final fifth wave. The way that I'm looking at the subcount behind it is something like this: our wave 1, our wave 2, our third wave, which took us to 1788. We then had a correction. This is the one that just occurred. And now our final leg should take us past $1,800 per ounce. It is for that reason that I'm more than willing to buy a breakout, but I want to see follow through in the markets as they trade overseas this afternoon. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.